Hi everyone, and welcome to Tuesday. And like we do every Tuesday, we just jump across and have a look at Yahoo Finance and see how the NZX50 has been performing for the week. And just before I do, just remember that this is for education purposes only, so in no way is it intended for personal financial advice. Okay, let's jump across. So I've got up here on the screen the S&P NZX50, the gross index, and Yahoo, you can actually see here that the New Zealand market did have a good week last week, and it was about 5.8% up, which is great. And you can see a reasonable amount of volume coming through, which is also a really good indicator. If I look to see how much volatility there is in the market, so that's just taking this average true range or the ATR and dividing it by the closing price of the market, we're sitting at just under 1.7% volatility. So that's a really good positive indicator. Once it gets up to around that 5 figure, it means that the market is quite volatile, and obviously, hey, it could go either way. Upon saying that, the market could do that anyway. As I've been talking about as well for the last few weeks, we really are in a range-bound market. We hit a high here of just under 12,200 points back in the end of January 2003, and we've sort of hit a low point here at around that 11,580 mark, and you can certainly see that we've been trading within that range basically since the beginning of this year to now. So who knows where that really is going to go. In order for this to be a really strong upward bull market or a growing market, we really want to see it close above that 12,200 level. We want to see the market break above that. Okay, so that would be a good positive indicator. Now we'll just jump across and run the moving averages over. So to follow me, I like to use the 30 exponential and also the 15. So like I spoke about last week, the market is still trading pretty much below both of them. I mean, it did close slightly above, but we can still see for the week, it really hasn't got clear of that 30-week moving average, which is something that I would definitely want to look at before I open any new positions. And it is trading clearly below this 15-week one. We sit back and look at it, it does appear that it could be facing down. Well, I mean, it does look like it's facing downwards. Whether that means that the market's going to go in that direction or whether it swings back and continues up, obviously only hindsight and time will tell us that. But for me, what that means is that for any existing holdings I've got in the market, I'm using trailing stops, and if they're performing well, which there are a number that are performing very well, I'm letting them run. Okay, I'm not just going to stop and exit all of those positions because they could keep running even though the main index is going through a little bit of a challenging time. So that's what it means for me. So it means also that I'm certainly not looking for any new positions because I want to see that the overall market is in a strong upward trend, and then it usually creates that momentum for other individual stocks as well. So it's just a pausing pattern, and hey, this will change, and when that does, when it's trading above those moving averages, that's when I'll then start looking to see if there's perhaps any individual stocks on the main board that could be considering worth entering into. So I'll just leave that there. I hope you're getting some value out of this. Obviously, hey, let me know because it certainly helps me create these videos. And if there's anything you'd like to learn, let me know because again, I will try and share that and teach that online here. Come back Thursday and we're going to have a look at Vista Group. So until then, have a great week. Thank you.